94% of entrepreneurs really have no idea how to actually pay themselves through their own LLC. So in today's video, I'm going to show you the best way to pay yourself through your LLC so that you can save on taxes and most importantly, not get in trouble with the IRS. Now, this framework, it really hinges on three simple principles that I'll show you guys in just a second. But first, you have to understand the real problem here. You see, most people know that they need an LLC, but they completely misuse it. So much so that they can get in trouble with the IRS when it comes to tax time. My name is JT, and for the last 10 years, I've helped hundreds of business owners, just like yourself, save thousands of dollars on their taxes each and every year. And most of that boils down to is the way you use your LLC. Just look at our client who, before working with us, was set to owe almost $35,000 in taxes, but after working with us, was able to pay $16,000, a savings of almost $18,000. Pretty good ROI if you ask me. Now, if you want to make sure that you pay the least amount in taxes legally, then click the link in the description of this video, apply to work with us, and we'll do it for you. Anyway, let me tell you how this actually works when you have an LLC. When you pay yourself through your LLC, you really only need to do these three things. They're actually pretty simple. One, open up a separate business bank account. Number two, simply transfer the money from your business account to your personal account. And then number three, after you've gotten the first two down, make sure that you are optimizing your tax savings. Before we go into specifically how you pay yourself as a business owner through your LLC, we have to know what exactly is an LLC because there is a ton of confusion around this topic. An LLC, all it really is what's called limited liability company. What that does is it separates you, the person, from your business. Take me, for example. My name is JT, and I own a business called P&T Advisors. What that does is it separates the liability for me personally through my business. For example, if I'm doing somebody's tax return and I accidentally type in $1,000,000 instead of $100,000 in income, I made a mistake. That person can only come after my business and the assets inside of that business. It limits to what I have to do personally. They cannot come after things like my home, my car, any of my personal possessions because they can only come after my business and what is there. That's all an LLC does. Most people think that by having an LLC, tax deductions, like they just rain from the sky and you become this tax savings machine. And that actually couldn't be further from the truth. Now, in step one, the first thing that you want to do, you want to open a separate business bank account. And this is very important in your business name or your LLC's name. And number two, it has to be tied to your EIN or what's called your employer identification number. The EIN, you want to think of it as your social security number for your business. Now, it's really important that you open that account with both of those things. The reason is that when you are an LLC or a business, you want to act like a business because let's go back to the LLC theory and why we open it. It limits your liability. If, for example, you open up a business bank account in your personal name and your social security number, you can have what's called piercing the corporate veil, which basically means that if you treat your business like your personal ATM and your piggy bank, a judge would look at that and say, this doesn't protect you at all, and now you are open or wide open. Think of it like riding around with drugs in your car. It's not necessarily illegal to have weed, but it just doesn't look good and it allows for police to search your car more. So think of it like that. Now, second, this is very important. You want to make sure all business income is deposited into this account. So if you charge money for your services like tax preparation and tax advisory, when I charge people to do their taxes, they pay me and it goes into my business account, right? No personal money goes into that account, only business. Now, number two, you want to make sure that all of your expenses are paid from this account. For example, this pen that I have in my hand, this mic, the rent, the lights, all of this stuff, that gets paid from my business bank account with my EIN and my business name on there. Now, I'm going to draw a star or an asterisk around this. This is the most important thing. No personal expenses are paid from this account. which means you do not pay your mortgage from the business account. You do not pay for your pet. You do not pay for your car from this account. Only business expenses. Now, hear me talk in step one about never ever paying for personal things from your business. You might be asking yourself, well, I have rent, I have mortgage, I have a car payment. How exactly then do I pay myself from this business because I need to live? It's really as simple as it sounds. You really just transfer money from your business account to your personal account. It really is that simple. You just move it from one side to the other. Now, I recommend moving money twice per month, once on the 15th and once on the last day of the month. Try to keep it simple. Just move money from the 15th on the 15th and the last day of the month. So you really want to start budgeting and think, how much do I need to live? If you need $5,000 a month to live to pay your rent, your car note, food, groceries, all that stuff, just simply split it in half. Transfer $2,500 on the 15th of the month and $2,500 on the last day of the month. Then, once that money is in your personal bank account, now go out and spend it. Make your credit card payments, make your rent payments, your mortgage payments. It really is as simple as that. However, so many times I see clients paying for rent from their business account and just swiping for their groceries. We want to go back to that principle of piercing the corporate veil. If that happens, in a worst case scenario, a judge or an arbiter could look and say, you don't treat your business like a business, you treat it like your personal piggy bank, because let's be honest, Phil Knight, who runs Nike, I really don't think he's using his business credit card to pay for his groceries. He gets paid however many times during the year, and then he pays for his mortgage, his car notes, his kids. He pays for that out of his personal account. You want to do the same thing. Move the money from the business to the personal account. Now, step number 3, you want to make sure that you are optimizing for tax savings, or really the fancy way that I like to say it is, you just really want to make sure that you are setting aside money for taxes. Because when you are self-employed as a business owner, you have to pay your own taxes. Let's think back to when we used to work for somebody else, when we had a W-2 salary. When you were paid a salary of $100,000, you only took home, let's say, $80,000 because you had your federal taxes, your state taxes, your FICA taxes, and all those other deductions. That money was paid for you, and then you paid on the balance, which is left over. However, as a business owner, you have to pay your own taxes and set it aside. So I always like to remind people is set money aside for taxes. A lot of times you will see different business owners or business owners, you will see different influencers talking about you can pay zero in taxes, you can do this, you can do that. You can, but that is really, really hard. When you are just first starting, you have to get used to the idea or the concept is that you are going to owe taxes. Now, my simple suggestion is really just saving 20% of what you transfer to yourself every single month. For example, if you are going to pay yourself $10,000, like in the example above, so the 15th you pay yourself $5,000, the end of the month you pay yourself another $5,000, just put away $1,000 into a savings account each and every time you transfer over. And I promise you, you will never run out or be nervous come tax time. Now, here's the big thing. You do have to be disciplined. When that money goes into when that goes into your tax savings account in January, that money has to stay there until the next year. Do not touch it because you will need to pay it out, whether it is through estimates or the next time that you actually owe your taxes. Now, again, if you follow this, I promise you, you will never be surprised come April. And lastly, I wanted to end off the video this way. A lot of the stuff that I'm saying, it's on YouTube, it's on social media, it's on the internet. It really is an inch thick and a mile wide. Now, if you want us to do this for you, to help you go from paying $34,000, just like our client last year, down to $16,000, where you can save $18,000 each and every year by doing this, and you want to have us do it, click the link in the description of this video, book a call with us, and we'll get you on the pathway to saving thousands of dollars in taxes each and every year. My name is JT, and I will see you guys in the next video.